Hi, my name is Charles FitzRoy. I'm the CEO of Bradda Head Lithium. We are a UK and now US cross-listed company on the AIM and OTC markets. Lithium explorer with assets in Arizona and Nevada. We've got a very unique situation as we have three types of lithium. We've got lithium pegmatites, lithium brine, and lithium clays, all in Arizona and Nevada, which are fantastic places to be developing projects. We listed our company last year on IPO, raised £6.2 million. We recently conducted a royalty funding in December. So we finished December 2021 with a very healthy $9.9 million in the treasury. And then we started 2022 with a very strong start to the year. And we got a resource update in Q1 and also in Q2 coming from our other projects. So a lot going on for the company, a lot to delve into in this interview. And that's why I've come to talk to Mackie today.
Fantastic, Charlie. Good to see you. Thanks for joining us. You're in the UK at the moment, and we are looking forward to talking about the US assets specifically. But we better start off a little bit about you. What's your background?
Thank you, Matthew. I'm a geologist by background. I studied geology at university before spending 5 years in the British Army. After leaving the Army, I worked in the mineral exploration drilling industry. Before going back to university, I went back to Imperial and did a master's in economic geology. And then I worked across M&A, equity research, asset management, and also recently corporate development. So I worked at Citigroup on the M&A team, metals mining, before going to BlackRock briefly with the NatRes team there. And then I was a mining analyst at a small brokers in London, running their mining franchise before joining China Moly, which is a very large Chinese corporate miner on their corporate development team, which I left them in April 2021. To join Bradda Head, to help them list and help them develop their assets and grow the company.
Brilliant. There's a few other names I recognise in the PowerPoint. Obviously, Ian Stalker, Jim Mellon, etc. But who are the guys who are active that you're working with on a daily basis who are actually driving this company forward?
Well, Jim is obviously a larger shareholder, one of the founders of the company. He's very supportive. Ian Stalker's the chairman. I speak to Ian, daily about what's going on. Ian's obviously, done this a lot. He's built 12 mines himself. He's got a phenomenal amount of experience within the industry, and he's a fantastic team member to have as chairman and mentoring on this process.
Right, but who's you speak to him on a daily basis, but you're running and driving it. Who are the guys on the ground? Because obviously you're UK based. You've got, well, we're going to talk today about 3 projects in the US. So who are the guys operationally that we need to be aware of, and what have they done?
So we've got a very strong team in the US. Jim Goodlinger, who's our CEO, is based out in the US. We've also got a geological team based out in Arizona who are running the drill rigs and running the programs out there. And these are guys which obviously making things happen out there in the States. And they're a very experienced team. And they're set in place for a very strong 2022. We've got a current drill program going on at WikiUp, which is just in Arizona, one of our sedimentary projects. And then we finished the drill program in November last year, where we've got a resource coming in this quarter. So these are the guys out there enabling this to happen. And they're also doing all the other work. We did a geophysical program last year. We've just completed an MT program this year on our brine assets. So these guys are the ones out there who are enabling us to do the exploration. And this is what's feeding into our long-term plan for the year. So we're doing the drilling our WikiUp project, which are sedimentary assets.
Right. Okay. Just if you don't mind, I just want to sort of break down a few. There's a lot of variables, right? You're a new company. You've got multiple assets, multiple jurisdictions as well. So we'll keep this simple. I want to start off with the business plan timeline, because you IPO'd obviously in the middle of last year. How long was the business and operation pre that, and what shape and form?
So the company had it started its life as called something else, and that company delisted. And then Bradda was formed back in 2017, whereby a company called Zenith Minerals, who are an Australian company, had found the assets in the US. And Bradda organized a JV earning structure where Bradda would earn 55% for an earning of $5 million. The company tried to list back in 2019 and did not manage to for a variety of reasons, mainly lithium price was jumping off a cliff. And the focus was slightly different for the company there. It was on some assets which had been moved out of the company. Last year, 2020, there was a renegotiation with Zenith, and the 55% earning agreement changed to 100% ownership by Bradda for a payment of $250,000. And also Zenith would dilute down to 15% at IPO, which is dilutable now any further raises further. So Bradda came to the market in 2021 with a completely different structure, different approach, different strategy. And that's why we had a very successful IPO. That's where things changed dramatically for us as a company.
Yeah, they did. So again, just I want to understand how much money went into the private entity or the newly private entity before the IPO? I'm hearing 5 million plus 250 so far. What else went in?
Well, the 5 wasn't fully 5 going in because I think the earning didn't complete. It was, there was the times of low lithium prices. I think everyone just sort of stood back for a bit, took care maintenance. The company was, kept alive by support of shareholders and raises over the period. Wasn't a huge amount going into the company at that point, but there's been, I think 2 to 3 million went into the company during that period of time, and it was very much sort of keeping the company alive, doing a bit of exploration here and there. But now we raised £6.2 million at IPO last year, and that enabled us to start our programs. So we were drilling at that time as well. We put that in place. We did a lot of claim staking. We enlarged our claims. We did the geophysics. All these things building into 2022. So 2021 was a big year of putting things in place, getting the structures in place. We learned from a lot of things we did in 21, and that's why 2022, this second drill program, WikiUp, is going 4 times faster than the last one. We're using a different type of drilling technology. We're using sonic drilling, which is uses very little water, and it's much more efficient and more environmentally sound for us as a company. And that's one of the key things for Bradda. We've come to the market with assets in Nevada and Arizona. We're trying to develop these for a US domestic supply chain. And we want to develop these from a low carbon footprint point of view, because most of the world's lithium comes from Australia and South America. Australia has about 60%, and that's from pegmatites. And then South America, roughly the balance. Pegmatites are high on the carbon intensity point of view because of where they're mined. They are sent to China to be processed and sent on to the US. We're going to develop assets within the US for the US market. Automatically, that will lower your carbon footprint. And also, any assets we develop, we'll be able to understand what energy mix is going into that processing capabilities. A lot of processing that happens in China, it could be any energy mix going to that. It's unsure. And also the environmental standards, it's unsure of what's happening there. So we have standards as a company which we adhere to. That's part of our ESG policy. We brought a lot of team members on last year, brought an ESG consultant, a processing technical consultants, an ESG consultant. He's been helping us to put into place an ESG policy to engage with our local stakeholders and also local tribes on the ground to make sure this company is set up for the long term. So we're starting good relationships from the start, and to make sure we're doing things in the right way, because that's what should happen out there. If you develop a project, you need a two-way relationship. You need to build that with the local stakeholders and the local tribes in the area to make sure we all benefit from what's going on.
Okay, I get it, and we'll get it. We'll get into all that, I promise. But I just want to again just start from the beginning, because we've not heard the story before, and these guys haven't heard the story before, and it's a new company. Why should we? Maybe start with some definitions first of all, because you talk about just with the US assets alone, you're talking about brine, sedimentary, and pegmatite. Just break that down for people. What are they?
Well, yes, fair enough. So I mentioned earlier, about 6% of the world's lithium comes from pegmatites in Australia. We've got a pegmatite asset called San Domingo in Arizona. We've also got clay assets in Arizona. Those assets are similar in structure to Bacanora's project, American Lithium's projects, other companies you might have heard of in the US, and Bacanora's obviously in Mexico. And then we have brines up in Nevada, and the brines are similar to what you get in South America. So
basically hard rock, clay, brine. Just to use terminology that other people use in the industry, because it sometimes people get a little bit overwhelmed with descriptions.
And the Nevada assets are very exciting because they are brines. We've just done some geophysics up there, 2 types of geophysics, some shallow and deep geophysics, and both have been promising because the deep geophysics have shown us there's a basin there in our Eureka project. We already knew there's a basin in our Wilson project, so we're planning a drill program for that later in the year to drill at Wilson, and also we're now planning one at Eureka. But also we did a shallow geophysics program at Eureka, which shows there could be a clay project there too, which is similar to ones in the region too. So, Eureka could be a double project, who knows? But our clay assets right now, we are drilling on, and that's why we started there, because we could drill there. And this is the easiest asset. Sorry, go on.
It is. Well, sorry, again, I just want to understand it because you've got a lot of optionality there. You've got a lot of assets that you're talking about in drilling. You've got resource Q1, resource Q2, brilliant, all good stuff. I want to sort of come back to the business plan, because if you're talking brines, clays, and rocks, all different technologies in terms of lithium extraction, some more established than others, right? You guys are at an early stage now. So what is the plan? Is this to get it to a size and interest for someone else to come in, or whether it be, buy you out, or be able to develop these things with their own balance sheet? Or how far do you think you can take these things? What was the plan out of the gate?
That's a good question. We are open to all those options because we've got the experience in the team to enable us to develop the assets. Ian himself has built 12 mines.
Has he built lithium? Has he done lithium?
Yeah, he's South America brines. He's worked on lithium projects. Ian's got a phenomenal amount of experience in that background, and he's a geochemist by background. So that's where Ian sort of brings a lot to the story. He sold lithium projects and sold many other projects and developed them through. He's a very phenomenally experienced team member, and the fact that we've got all these team members within the board and management, that's the key thing for us. Returning value to shareholders. We're going to do what's maximizes the value to shareholders. If we want the shareholders, the best value is going to be developing the assets, we will do that. If we get suitable offers in the future and their shareholders, that gives most value back, then we'll look at selling assets on. But we're happy to do both.
Okay, I'm trying to work out what we're buying into. Like, we're buying into an exploration company, or is it a development company, or do you think, obviously with Jim aboard, attracting money is not going to be such an issue, but strategic partners coming on board later on and going the full way. But what am I buying into? What type of company are you? How do you describe yourself?
Well, we are unique because we have three types of lithium asset. Each of these assets on their own could potentially be company builders. And the fact we've got three types is key for us because we've got 47 square kilometers of sedimentary claims in Arizona. We've drilled about 2% of that. We've got a resource already in place. We're developing an updated resource. Just to put that in perspective, American Lithium, who've got assets up in Nevada as well, they've got 30 square kilometers and they've drilled about 40% of their claims. So we're going to develop a big asset, our clay assets. We know the clay is there. We've done the geophysics. We're developing our process and technology at the same time, because that's the key thing of clays. So this is, I'm going back to your question, Matthew, don't worry. That is a company builder in itself. And then we've got the brine assets up in Nevada and the pegmatites in Arizona as well. And the pegmatites, we have done geophysics. It's been very promising so far. It's demonstrated that those pegmatite roots go down deeper. So we're designing a drill program to understand that. And if we get an idea that what we think is there, we think there's a deep feeder system there, then that is a huge thing for the company, because the market understands brine assets, he understands pegmatite assets. They're still getting its head around clays, but if we demonstrate we've got a viable pegmatite, then our valuation will, it's a game changer for our valuation, and that is what maybe we'll put a lot of focus on. We've got a lot of funds set aside from the royalty transaction for developing our clay assets to early stage technical study, and we also put out a placement with that royalty transaction, which we can use for the brines and the pegmatites. So we've got enough funds to be able to look and understand more about the brines and pegmatites. But obviously any huge drilling program at the pegmatites would require additional capital at some point.
Right. Okay. I agree with you. You've got lots of optionality on the table, but you can also look at those as liabilities if you don't have the cash to, develop those assets. Right. So the brines, I think you're right, are more understood than perhaps, obviously, I'm going to use the phrase hard rock because it's a phrase that people understand and use, right? So the brines and the hard rock people do understand, and they are potentially, separate companies in their own way, but, then potentially lies some confusion or misunderstanding for you later on when people try and work out what you are. And then you layer over the clays on top of that, where there are companies out there who have achieved huge valuations without necessarily cracking the technical code there to be able to unlock that without bringing in a gang feng or similar to kind of help them with that. So you can sort of see that. If I'm looking forward, I'm trying to work out the path that you're going to follow to ensure that these potential future bumps along the road are best managed. And how you as a company are coming at the three different types of lithium projects that you see ahead of you.
Yeah, no, I'm, I can understand how that is something which you want to make sure we're on top of, and we are on top of it. The clay assets, we're drilling those out. It's just a case of drilling out the clays. It's not a really technical process because the clay is up to 100 meters deep. It's going to be mined in a very shallow manner. It's just a case of drilling up. The processing is the key thing, the clays, and that's what we're doing. We've got our processing consultant who's helping with that, and we're using very good labs for that as well. So that is very much in hand. The pegmatites, we have been doing a lot of work on them, mapping a lot of 3D modeling for the last six months, and we're putting a drill program in place for that to understand more. Once we understand more, then we can come back to market with a plan going forwards. Right now, we're still understanding the pegmatites, but we think what we find is there, what we think is there, and that is a huge game changer for the company. And then the brines need a lot less drilling than the pegmatites and the clay, so it's much easier. It's easier to manage that from a operational point of view because it's more, you're doing a few holes and then you're getting the brine out and doing the testing. It's slightly different and less drilling intensive, less operationally intensive than the clays and the pegmatites.
You're subject to a little bit of some price monitoring at the moment because you've had a doubling of your share price in the last month. Why is that? Do you understand why that's happened?
There's a variety of reasons. Obviously, we've done a lot of good work in 2021, and we've had some good announcements out this year. Huge de-risking events, I suppose. We had a royalty agreement in December whereby LRC, which is Lithium Royalty Corp, we raised an aggregate of $10.5 million. $8 of that $1 million is via the royalty placement, which will be used, so the royalty transaction, which will be used to develop our clay assets. $2.5 million is via private placement with LRC, which we can use to develop our brines and or pegmatite assets. So we've got a lot of optionality of those funds. The royalty transaction was phased, so we got $2.5 million initially, and then we get another $2.5 million when we increase our resources up to 1 million tons of LC. We're currently at 185,000 tons of LC, and then we also get another $3 million when we get up to 2.5 million tons of LC. Those are very achievable targets, we believe. We've got 47 square kilometers, and I said earlier, American Lithium have got just under, I think, 5 million tons of LC at a certain cutoff, and they've got 30 square kilometers. So we've got a huge area out there. Also, another de-risking, two other big things which came through quite recently. One was we exercised the option payment on Burrow Creek East, which has now changed to Basin East, with cheetah partnerships. That de-risked that. It was not a risk for us. We were obviously going to do it, but we were just waiting to the time we had the suitable funds available to do it. And then we released our metallurgical test results, which demonstrated really good early stage lithium extraction, up to 99% lithium from the leach, which is phenomenal. And it really compares very favorably with all our peer group. Some of the best results I've seen.
What are the contaminants in there?
There's the usual sort of ones. We have some which are at lower levels than other ones too, but it's very early stage, so it's something we're now looking on to work out the best way to make them inactive, make sure we can get the process to battery grade lithium carbonate.
Right, and why have you kind of? I saw the chart with regards to the comp with American Lithium. Obviously, the market cap is significant. They've had huge attraction huge traction in the US marketplace. It makes sense to comp yourself to them with your American assets, but again, how are you going to play that? Are you going to try and direct people towards what American Lithium's got versus what you've got? I know you talk about you've only explored 2%, they've explored 40%, but you've got to actually work out how much money you're going to need to advance that. You're going to need to think about, well, how does that thing move forward? And there's only 2 million going into the other two projects. So is that your flagship project? Is that how you're positioning that?
Well, we did have some funds from the IPO into the other projects too. So the 2.5 million coming in has actually added to funds to our projects. But yeah, most of the funds are going towards our sedimentary assets because that is where we are permitted to go at IPO and where we see maximum growth from a short time period on resources, because it will become quite clear the comparison between us and them once we prove up resources. And that's what we're doing this year. Last year we had a good start to understand what was going on. Now we've got the funds in place to get us to an early stage technical study at our clay assets. And that's really important to us as a company. The fact we're able to drill out most of our 47 square kilometers and get an early stage technical study in place from funds we have now.
Right. And so, what's the timing on that? I mean, you mentioned two resources, one in Q1, one in Q2. What's the timing on this one?
Yeah, so at our Basin East project, which is where we're updating a previous resource we did a 10-hole program last year, and that'll be out in Q1. And then Wiki Up, we've started drilling in December this year, and that maiden resource will be out in Q2.
What does a 10-hole drill program get you in terms of putting out resources? When you sort of underwhelm the market with the size of the resource?
Well, that's what we did. We did a 10-hole program because we only raised a certain amount of funds at IPO. We wanted to be conservative. We wanted to get things going and increase the resource there because there was a 2018 program done. So what we did is we tested 3 of the holes from that program. And at Basin East, there's 2 layers of clay. And some of the holes in the 2018 program didn't go down to that lower layer. So we did 3 holes to test the old program. Then we did another 7 holes to expand the resource. And because of clay, it's all quite uniform. You can actually get a decent upgrade in resource because of that. So that's why we've chosen to do that there. It's our biggest bang for buck in some situations because we're permitted to go there and we can now get a decent resource upgrade, which we're seeing very good potential for a size and grade increase and confidence increase coming into this quarter.
Well, coming back to the comp with American Lithium, obviously, you compared them quite well, favorably, except for tonnage, right? So you've got to expand that resource out. So, and I get the homogeneous nature of clays too. So, how much more drilling will you be able to do? How quickly do you think you can expand the resource to try and understand the sort of the contained lithium, because they're nearly, where are they at? Something significantly more than you. What are they? 40 times larger at the moment?
It's a lot larger. They've got sort of, it's a lot larger, but they've also drilled out 40% of their asset base. If we had drilled that much, we would be definitely getting near that in the numbers, we hope.
But how much does that cost, do you think? How much is that going to cost you to kind of get there, or at least start moving that direction? And how ambitious are you with that?
Yeah, we're very ambitious. We started a fast track drilling program, exploration program to get things going quickly, and then we've now identified the best drill method to do that. Our Wiki Up project, which is we're starting on now, it's 3 times as big as our 10-hole program. So we're doing 28 holes at Wiki Up, and that's roughly over sort of 5 to 6 kilometers squared area. So by the end of Q2, we would have drilled on claims of roughly about 20% of our block. A bit under that maybe on that block, but we've got to remember is we're still doing exploration phase drilling on our claims. So it's not going to be like American Lithium where they've canvassed all their claims. We're understanding Wiki Up because we haven't drilled in those claims now. So it's going to be a resource in Q2, but it's not going to be, American drilling's drilled out 40% of the 30 square kilometers. It's not going to be half the size of theirs, but it's going to be a big increase in what we have now, because then we'll put a plan in place to expand that.
Right, that's what I was getting at, because I don't want you, or people think you're coming on here and trying to compare yourself to them, out of the gate, which you clearly aren't, but nor that you would get there quickly. But what I do want to try and understand is what do you, if the ambition is there and you can keep delivering, I say the homogeneous nature of it, you should keep delivering results quickly. How much money do you think you will need to raise, and when, to be able to start to paint that picture?
I think with the royalty funds we have now, we've got enough to get us to that stage, because we're good enough to get us at the clays to early stage technical study. And I don't think we'll need more at the clays until it gets to that level. We would need more the other assets, because we've got enough to sort of understand more about them. But once we demonstrate they are viable options, then we are going to probably have to do something on the market at some point. But we're an exploration company. That's sort of what exploration companies need to do, because we're not revenue generating right now.
No, what are you about for? What, £45 million with the recent surge in share price? So I get that it's early days, but the ambition is there. Can we talk about some of the other projects then, in terms of the second resource that you're looking to put out?
So the pegmatites, the hard rocks. Yeah, well, the hard rocks is very exciting. They were found by Australian geologists under the company Zenith, and the reason why we've got them is because there's pegmatite mining is, mostly in Australia. And the Australian geologists saw these assets and they thought they were comparable to some assets in Australia where you have these sort of small dikes at surface. And then deeper down, you've got these big feeder systems. It's harder to spot because you see these dikes at surface and you think this might not be a viable option. So we're now putting a drill program in place to drill down below these feeder systems, these pegmatites, to understand what's going on at depth. Once we demonstrate there is a viable pegmatite operation there, then it's so exciting for the company because we'll be able to get something into production much more quickly than we would a clay asset, because pegmatite mining is very well understood. You produce 6% spodumene concentrate, which would be shipped to a conversion facility. There's quite a few popping up in the US. I know Tesla are putting one in Texas. And that would be easier for us to get into operation and much more quicker than a clay operation.
Which leads me to literally you walk straight into the next question, which is, so why on earth address the lithium clay project first rather than something which is going to be, it's there, it's well understood, the technology is well understood, and you can get into production quicker? Why do things the way the order in which you are doing them?
We know the clay's there. We're permitted to go at the clays. We started the clays. We know we've got potential for big resource. So that's why we doubled our claim land holding last year at the clays, because we realized that the size is everything in clays. You need a big resource to make a world-class project there. And that's why we went with the clays. And it also
comes with this inherent perception that the clays are difficult technically to crack, right? Even American Lithium have had their problems, and they made an acquisition last year, brought in a more technical team to kind of help them with that, right? Or you bring in a Chinese partner, usual story, right? So there's a sort of inherent perception there. Why not go with the easier, cheaper, quick win, like hard rock?
Well, we've got things, all these projects are very exciting. And that's why we're going on to hard rocks now. We've got a strong base in the clays, which will get going. And that's just going to be a case of drilling out the resources. The processing work's going on in the background. So that's going to be doing everything nicely. And then now we've got time to focus on the hard rocks, demonstrate what's there, so we can get, 2 very good projects to market. And then we've got the brines up in Nevada, which again, they require less drilling. Obviously, there's some more test work, and they'll be more capital intensive because of the processing facilities for a brine up in Nevada. But the clays, the pegmatites are going to be the easiest and cheapest to get to market, and then the clays are going to be somewhere in between. And then you've got the brines, which are going to be higher capital costs potentially.
Okay, how are things in the States? Because we've got the Biden administration wants to be greener, but doesn't actually like miners. So how's it working in the States that you're in?
Well, we've got a very good relationship with the local and state governments. We've got a good ESG professional who we've got a policy in place to engage with the local stakeholders and local tribes in the area. So far, we're having very good relationships and very good talks. We haven't had any issues getting permits. So we're seeing very encouraging market for developing projects over there, and we've been encouraged over there. So there's been nothing we can see of any sort of negative government policies coming down to us. It seems very positive.
Okay. And so no holdups, no bumps along the road. It's going at the speed that you thought it might. Yeah,
we had a minor delay with the WikiUp permit, but I think that was purely COVID related. Everywhere's had delays with COVID. I think it was a month or a bit. It was nothing massive, and everything else has been going the right way. We've got a very good permitting team on the ground. We've got a lot of permits coming through this year. We're drilling at WikiUp now. We're going to have permits coming through at other portions of our basin project, so Basin East Extension, Basin North, Basin West. And those projects all bolt onto each other, and they'll help us put this big resource in place at Basin. And that's what we're looking forward to. And then we've got Basin West Extension, other portions of Basin West, and WikiUp South. So we've got all these projects which we're permitting and building onto in a sort of very sensible way to understand what's there and then build a big resource up.
How much has the management team got? Well, first of all, what percentage of the companies does the management team own?
So management's about 22%, management board, 22% of the company.
Is Mr. Mellon most of that?
Yes. Yeah, Jim is the bulk of that. Jim's been, he kept the company alive whilst, after the last IPO failed attempt, then back in 2019. So Jim has been hugely supportive of shareholders, and he's founded the company back in 2017. Bradda Head is it's a headland of the Isle of Man. So obviously it's a company very close to Jim's heart. So yeah, he's a very supportive shareholder and someone we really appreciative of having him on the team.
Absolutely, good guy. With you, so is this your first time as the CEO of a public company?
Yep.
It is, right, okay. So you're probably well aware, having worked at the places that you've worked, but now you're in the hot seat yourself, you're going to learn about the expectations of retail market. So retail is a big piece of the investor share registry at the moment, is it?
Yeah, retail is a huge portion of our investor base at this stage of the company, because it's a story where institutions can't necessarily get into it because they're on market cap, and the retail see the value and they understand the story, and they've been really helpful. We've got a very good Twitter following. And the retail market's been fantastic, helping us get the story out there.
Absolutely. We've been in contact with a few of them, or they've been in contact with us. But they are going to be expecting you to do things like be buying shares in the open market when you're not blacked out, that is. And what are the other things you're sort of learning on the job, as it were? What are you discovering?
Well, I was quite lucky in some respects, because I worked in M&A, equity research, asset management, corporate development. So a lot of my background has been involved in many of the things now, but it's things like this, Matthew, talking to yourself is something which hopefully my army training helped me with as well. But it's an area of which I'm learning on the job. But it's a fantastic job, and it's a busy job, and you have to be multitasking all the time. But it's something where I'm enjoying very much building something, and that's what the team is doing. The team is trying to build something in the US to bring value to shareholders and grow the company, and that's what we're doing as a team. We hope we've done well so far, and I think our share price risen about 150% since IPO is demonstrating as a team we're doing very well there.
Yeah, and are you finding, because obviously the dual listing is going to, so what is the listing in the US?
It's OTC QB, so it's BHL IF is the ticker.
Right. Okay. And that's obviously helping people from over these shores access it. But are you going to be spending more marketing effort and budget in the US, given what you've seen with some of the US success of the US companies in the battery space more broadly?
Yeah, definitely the US is a big market for us. We've also got a North American broker called Red Cloud, and we are looking into the potential for a TSXV listing with them. So that is something, again, which might help the company. The Canadian market has been very favorable to battery metals. So having the cross listing in the US, and then we are considering the TSXV listing at some point. So we can see how seriously we take the North American market from those two things.
Brilliant. Okay. Well, Charles, as a first pass, really interesting story. I like what you're doing there. Obviously, right space, right timing. Would love you to come back in and perhaps sit down with one of our technical guys and sort of get into the weeds a little bit. Certainly on the two projects that you're putting resources out on, so we can sort of understand those a little bit more, if you don't mind. Appreciate your time today. Thank you.
Thanks, Matt. I just want to leave you a few points as well, because Bradda is a very exciting story. We listed last year, raised a good amount of funds, interest from a royalty provider, which is really shows confidence in our assets. We've got 3 unique asset types in Arizona and Nevada. Some of the 1 and 2 ranked in the Fraser Index Mining Investment Attractiveness Survey. We're near the end users, we're the infrastructure. All the battery manufacturers are growing up in the US. And the fact we have 3 project types is really exciting. That is unusual in a sort of explorer of our level. Brines, pegmatites, and clay assets. There's a lot coming for 2022. Resource update in Q1, maiden resource Q2, drilling at our brines and pegmatites later in the year, and then permitting and drilling at other clay assets. So we're going to have a big resource growth this year, and a lot to come from our pegmatites and brines. So it's a really interesting story, well funded, near the end users in the US, an exciting time to be involved. And the company's done very well since IPO. We're up 150% since IPO. So I think it's a fantastic opportunity for people to invest in at this stage.